Welcome to Tikona Capital's weekly market review for the 6th of March 2026. Let's take a quick look at how markets performed, the key economic developments, and what investors should watch in the coming week. Indian equities ended the week sharply lower as geopolitical tensions in West Asia triggered a strong risk-off sentiment. Brent crude surged above $82 following an attack on Saudi oil infrastructure, raising concerns about inflation and global energy stability. The Sensex declined nearly 2.9%, while the Nifty fell by a similar margin. Broader markets also weakened, with both mid and small cap indices dropping over 3%. A brief recovery midweek proved short-lived as renewed selling pushed markets near their weekly lows. On the domestic front, economic activity remained resilient. Manufacturing PMI rose to a 4-month high of 56.9, while services PMI stood at 58.1. The composite PMI increased to 58.9, indicating strong expansion across sectors. Rising international sales and improving business confidence also supported momentum, suggesting that India's economic fundamentals remain robust despite global uncertainty. Globally, economic headwinds intensified amid the surge in oil prices and geopolitical uncertainty. Brent crude jumped more than 10%, crossing $82. China's manufacturing PMI slipped below 50, signaling contraction in factory activity. Meanwhile, the United States reported higher than expected producer price inflation, with core PPI rising 0.8%, pointing to persistent price pressures in the global economy. Tikona Capital provides research-driven wealth solutions for professionals and family offices across equities, mutual funds, unlisted opportunities, and IPO advisory, built to create long-term wealth. Despite the broader market decline, a few stocks delivered strong gains. Tejas Networks rallied over 24% on optimism around India's telecom equipment manufacturing push and expectations of new order inflows. OneSource Specialty Pharma gained nearly 12% on positive sentiment in complex generics and contract manufacturing. Phenolics Cables advance on improving demand from the infrastructure, housing, and power sectors. On the downside, Force Motors declined about 16% as investors booked profits following a strong rally in recent weeks. Aegis Vopak Terminals also corrected amid concerns around near-term growth visibility. JK Tyre fell as rising raw material costs raised worries about potential margin pressure within the tire industry. Download the Tikona Capital app and start your journey to wealth creation. Track all your investments in one place with seamless onboarding and real-time portfolio insights. In the unlisted market, investor activity remained steady. GIFT Nifty recorded an all-time high single-day turnover of $23.48 billion, highlighting growing global participation in India-linked derivatives and strengthening GIFT City's position as an international financial hub. Industrial refrigeration company Frick India also attracted investor attention, with steady demand continuing in names such as NSE, Frick India, ESDS, and OYO. Markets are expected to begin the coming week with a cautious tone as geopolitical tensions and rising crude prices continue to influence sentiment. Domestically, investors will track money supply and February inflation data closely after January's reading of 2.8%. Globally, attention will turn to China's inflation data, US inflation figures, and the second estimate of US fourth quarter GDP growth. With several key macro releases ahead, volatility may remain elevated. What do you think will drive markets next week? India's inflation data, US inflation numbers, China's inflation figures, or ongoing US-Iran tensions? Let us know your view. Just as Krishna guided Arjuna, your Sarthi to investing journey brings clarity, courage, and discipline to navigating financial markets. Investments in securities market are subject to market risks. Read all the related documents carefully before investing. Connect with Tikona Capital to explore research-driven investment solutions. Follow our insights, blogs, and market views across our digital platforms.